Tesla stock has bounced from the $390 zone. But here is the important point. This does not mean the battle is over. For me, the real test is not $390 anymore. The real test is whether Tesla can break and hold above $416. Hi everyone, this is Ken. In the previous video, I said the key question for Tesla stock was whether it could defend the $390 area. After that, Tesla briefly dropped into the $386 range, but then rebounded back to the $406 area. So yes, buyers did step in near the $390 zone. That is a positive sign. But I do not think it is time to say Tesla is fully bullish again. Not yet. Because above the current price, there is still a very important wall. That wall is around $410 to $416. In today's video, I want to explain what this rebound really means, why $416 is now the most important level, and what I am watching next as a Tesla investor. First, let's quickly review the recent move. Tesla stock failed to break through the resistance around $450. After that, the stock started to lose momentum. It dropped through the $420 area, then broke below $400 and also moved under the 200-day moving average. At that point, the short-term chart clearly weakened. That is why the $390 zone became so important. This area was close to the 50-day moving average, and it looked like a possible support zone. If Tesla had clearly broken below this level, the next downside targets could have been the $380 and possibly the $360 to $370 area. But this time, Tesla did not collapse. It dropped into the $386 range, then rebounded back above $400. So, compared with the previous chart, the situation has improved. However, this is where investors need to be careful. Recovering $400 is good, but recovering $400 does not automatically mean Tesla is strong again. The market often gives a temporary bounce after a sharp drop. This is especially true when a stock becomes oversold in the short term. So the real question is not, did Tesla bounce? The real question is, can Tesla continue after the bounce? And that brings us to the most important zone now, $410 to $416. This zone matters because two important moving averages are sitting almost in the same area. The 20-day moving average is around the $415 level. The 200-day moving average is also around the $415 level. That means Tesla is facing both a short-term resistance line and a long-term resistance line at the same time. This is why I see $416 as the real wall. If Tesla can break above this level and stay above it, the chart will look much better. It would mean Tesla has recovered the 20-day moving average and the 200-day moving average. That would be a much stronger signal than simply bouncing from $390. If Tesla breaks and holds above $416, the bullish scenario becomes more realistic. In that case, the next levels I would watch are the $420 and after that, the $430 area. This would suggest that the rebound from $390 was not just a temporary bounce. It could become the beginning of another attempt to move higher. But the important words are break and hold. Just touching $416 is not enough. If Tesla moves above it for a short time and then quickly gets rejected, that is not a strong confirmation. The second scenario is rejection near $416. And honestly, this is the scenario I am watching very carefully. If Tesla recovers to the $410 to $416 zone but cannot break through it, the stock may fall back toward $400. That would mean this move was only a technical rebound after being oversold. This is not necessarily a disaster, but it would show that buyers are still not strong enough to take control. In that case, $400 becomes very important again. Tesla needs to hold above $400 to keep the current rebound alive. Now let's look at RSI. Previously, the 4-hour RSI was around 31. That was close to oversold territory. So at that time, I thought a short-term rebound was possible. Now RSI has recovered. The daily RSI is around 48 to 49, and the 4-hour RSI is also near 49. This is better than before, but it is still not clearly bullish. For RSI, the 50 level is very important. When RSI moves above 50, it usually shows that buying momentum is improving. But when RSI gets stuck around 50, it means the stock is still in a neutral zone. So my view is simple. RSI has improved, but it has not confirmed strong upside momentum yet. Next, let's talk about volume delta. Recently, volume delta has turned positive. This suggests that buyers came back after the sharp drop. That is definitely better than the previous situation when selling pressure was much stronger. But again, one positive signal is not enough. What I want to see is follow through. If Tesla attacks the $410 to $416 zone with strong buying volume, that would be meaningful. But if the volume is weak and the stock gets rejected near $416, then sellers may step in again. So volume delta is improving, but it is not the final answer yet. So here are the 3 levels I am watching now. First, $410 to $416. This is the most important resistance zone. If Tesla breaks and holds above this level, the chart improves a lot. Second, $400. This is the psychological support level. Tesla has recovered it, but now it needs to hold it. Third, $380 to $390. This is the previous defense zone. If Tesla falls back there and breaks below it, the recent rebound may have failed. So, what is my conclusion? From Ken's investor perspective, Tesla is clearly better than it was in the previous video. The stock defended the $390 area. It recovered $400 and it moved back above the 50-day moving average. These are all positive points, but I still do not think the bullish reversal is confirmed. The reason is simple. Tesla has not yet recovered the 20-day and 200-day moving averages. That is why $416 matters so much. For now, I would not be too bearish after this rebound, but I also would not be too aggressive until Tesla proves it can break and hold above $416. The most important thing is not to trade emotionally. When Tesla dropped, we did not need to become too bearish. And now that Tesla has bounced, we should not become too bullish too quickly. The better approach is to watch the conditions. Can Tesla hold $400? Can it break $416? Can buyers support the move with stronger volume? That is what I will be watching next. To summarize, Tesla stock has bounced from the $390 zone and recovered above $400. That is positive, but the real test is still ahead. The key level is $410 to $416, where the 20-day and 200-day moving averages are waiting. If Tesla breaks and holds above $416, the chart could improve toward the $420 and $430. But if Tesla gets rejected there, we may see another test of $400. So for now, I am watching the next reaction very carefully. The rebound has started. but the confirmation has not arrived yet. That's all for today. If this analysis helped you understand Tesla's next key level, please hit the like button. And if you want daily insights on Tesla, AI, Robotaxi, and the future of technology from an investor's perspective, please subscribe to Life in the Future. Thanks for watching, and let's keep enjoying life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.